Good day, guys. How we doing? Hope you're doing very fine, and hope you've been good. All right. So I want to explain something very fast here. I want to show you how I make 30 plus pips on a trade, which is this trade. All right. So I took it on my. I took it on. This is a demo. This is a demo version of it. I took it on my MT5 account and also give this signal for people on my signal group. All right, so I want to explain some stuff for us here to further expand our understanding. All right, so let me go to 4 hours. All right, so I took, okay, I think Monday started here. Monday for this week started here. Yeah, so on Monday I took a very early scalp. I took a scalp that was a winning trade. On Tuesday I took a loss. So since Tuesday I just decided to wait for my hedge in the market. And whenever I talk about hedge, what I mean is I'm waiting for my model itself, because the model I traded on Monday is not really my hedge. It's not really a model I like trading. So I just borrowed the money because I needed fast cash and hold. Tuesday that I took the loss, it was not also my model I traded with. So after the loss, I just told myself, I said, bro, you've been trading for more than 1 year now. Why are you behaving like a baby in the marketplace? Wait for your edge. Edge means wait for your setup. So what did I do? All right. Okay, so I know I've talked to us about ICT before. We talked about ICT. We talked about breaker. Bullish breaker and bearish breaker. The breaker block is a concept of my mentor ICT, who has now retired. Now, I like working on the 4 hours time frame first, personally for me. So what I did on Tuesday after taking that loss, this was Tuesday. After taking the loss, I told myself that, guy, just wait for a hedge, and this is what I mean by my hedge. Now, this is 4 hour time frame is an higher time frame compared to the 50 minutes that I majorly use for my analysis. 4 hours time frame is an higher time frame compared to 1 hour time frame, 30 minute time frame, 15 minute time frame, 5 minute time frame, 3 minute time frame. 4 hours is an higher time frame. The daily time frame is an higher time frame compared to the 4 hours time frame. I don't think that's difficult. That's just like hierarchy in time. Do you understand? So this is the 4 hours time frame, and I looked at it at first. All right. When I looked at it, I saw this is a swing low, right? This is a swing high, right? Then this is another swing low. What I mean by that is that this is a low high, then a lower low, lower than this initial low. Now, between this low and this lower low, there's a high in between them, this high. Don't forget that 3 candles form a swing high. I've talked about that in our liquidity. 3 candles form a buy side liquidity, 3 candles form a sell side liquidity. Now this high, 3 candles forms it, which is this blue candle, which is a bullish candle, this red candle, which is a bearish candle, and this third candle, this is a swing high. Now in this high, is there a bullish candle? Yes, it is a bullish candle. Now this bullish candle, I annotated it. This bullish candle is nothing but a bullish breaker. Why? Low, right? High, right? Lower low. This bullish candle is a what? Is a bullish breaker. If what I have is high, if what I have is let me pick my. What I have is, let me delete this. What I have is how would I do that? High, low. Okay, I've explained this in the breaker block video lecture. Okay, let me go back. This is a low, this is a high, this is a lower low, right? Very simple. Low, high, lower low. Lower low in the sense that this low is lower than this initial low that I picked, right? You're asking, why didn't I pick this low? I'm not picking this low because this one give me a perfect it give me a perfect fulcrum. Like, it's easier for me to pick this low to this high to this lower low than this one. Because if I pick this low here, this guy is lower than this low, so I'm not looking at this one. This one does not catch my fancy. I like this one. This is a low, this is a swing high, this is a lower low. Now in between this low and this lower low, there's a swing guy there. In that swing guy, any bullish candle there in that swing guy is a bullish breaker. That candle itself is a bullish candle. So this is the bullish breaker. Now my edge was that I was waiting for the market to trade to this bullish breaker during the week. So the market traded to this bullish breaker on what? On Wednesday, which was 2 days ago. So as market traded to this bullish breaker, I would go to my lower time frame. So I went to my 1 hour time frame. You see, that's what I mean by my hedge. So I'm not doing any of that thing. That is what I'm just focusing on. That's higher time frame POI, which is point of interest. So go to my 1 hour time frame. So the market entered the bullish breaker in this candle. It entered in this candle. Right now, what I want to see is market rejecting this bullish breaker, because if market comes here, what I want to see is market going up. So if I want to see a rejection, if this would actually serve as a bullish breaker, what I want to see is market enters it and give me a break of structure. Now as market enters, as the price enters this bullish breaker here, this swing high must not be broken unless we have a break of market structure. Market price went and broke this swing high. So what does it mean? It means that we are now what? Bullish. Very simple. Market enters a bullish breaker. You saw how I marked the bullish breaker. Then market rejected from the bullish breaker and what? Broke the high. You can even see on the 4 hours time frame. You can see the 4 hours time frame here that the body of the candle is respecting the bullish breaker. The body of the candle, my mentor will say that this bullish breaker will measure half of it, 50% of it. Like he does not like seeing the body of candle violating that middle, the consequent encroachment of this bullish breaker. Now you can see that what we have here is just weak. It just tapped into it and rejected. If you understand what I just said, don't worry about it. That's not actually very important. That's not important. Now what I want to focus on is that after price tapped into the bullish breaker on the 4 hours time frame, we move to the 1 hour time frame. 1 hour time frame, price tap into the bullish breaker. We have a swing high. Market broke the swing high here, so we are now what? Bullish. So will I just enter the market immediately? No. I will go again to my what? I will go again to my lower time frame. Now look at this. Now I want you to see something. Now market enters what? Enters the bullish breaker here. The market price rejected, right? Rejected. So now I know, okay, I'm bullish. Now all these ones were done in the midnight in Nigerian time. You can see. So I'm not trading this time. So I want to enter the market to buy in my own time session, London time session or New York time session. That's what I'm looking for. So all this market entered, then rejected. This one were price movement in the midnight, which I don't partake in. So now the real deal for me is now on Tuesday. Is on Thursday now. Now I know that, okay, I'm bullish. So what I'm looking for is a buy signal. Very simple. You see, you saw how I got my order flow. I know that, okay, since price took out this on the 1 hour, since he took out this high on the 15-minute time frame, since he took out this, I know, okay, our order flow is what? Is bullish. So that's the only thing I'm looking for. I'm looking for bullish move, bullish move, bullish move, bullish move. Sure you get. Now on Thursday now, there was news during London session. Let me mark it. 2 to 5. There was news this London session. You can check your forexfactory.com or any website you use to check your news. You will see that there was news there. So I don't like trading news, so I focused on New York session, which is between 7 to 12 o'clock. Now this is the real deal. Now if this is New York session, what section do we have before New York session? It is what? London section. And under our important liquidity, we like marking our previous section low and our previous section high. Now this is London section started here, right? So this is what? London high. You can mark it from 2 to 5. You see that this is the highest high on London in London, and this is the lowest low in London. So these two guys are important liquidity. Go and watch the important liquidity video I dropped for you. This is an important liquidity because it's the liquidity in of a section. So as London section opened, it went and attacked this swing low, this SI liquidity, which is what? Which is an important liquidity. Classification: previous section low, London section low. So immediately as markets tapped into this sell side in this candle, which swing guy must not be broken, or else we have a break of market structure. This is it on a 15-minute time frame. Did the market break it? Yes. So further confirming that we are what? We are bullish. Now, very simple. Now look at this now. Now, this is a what? Swing low. Now I know that okay, I'm bullish now, right? I'm looking for my entry technique. So this guy has taken out this liquidity. So my sell side is safe here because liquidity this candle has taken out liquidity, sell side liquidity. So prior, which later gave a break of market structure, liquidity has been taken out, followed by what? Break of market structure. So my stop loss is safe here. So now the only problem I have now is where will I enter the marketplace and buy? Now there are two entry models that I have. I have the fair value gap and I have the bullish breaker. Let me explain the bullish breaker first. Now this is low, right? This is a swing high, right? This is a lower low. Very simple, just what I explained in the previous on the 4-hour time frame. Swing low, swing high, swing low, low, lower low. In between this low, lower low, is there a swing high? Yes. In that swing high, is there a bullish candle? Yes. This is the bullish candle right here. So this bullish candle you can buy, but your stop loss has to be here. Let me show you that I actually bought in that bullish breaker. So I bought in the bullish breaker, but my stop loss was under this low because markets might want to come down and tap into this fair value gap. So I was giving room for market to breathe into my fair value gap. So either I buy in this bullish breaker or I buy in my fair value gap, and my stop loss is here. So you can see I bought 500,000 worth of Euro USD. I took out my first partial 200k. I took out my second partial, and you can see I'm holding to full TP. At this point, if the market comes and eats my stop loss, I don't mind because I've taken first partial and second partial. So I know the things I've explained here are quite cumbersome, but I want you to watch it as much as possible. Watch again from the 4 hours time frame, getting my bullish bias, breaking that to the 1 hour time frame to see if there's a break of my trade, then breaking to the 15 time frame, then now trading on my trading day within my time section using that bias in mind. So I was also waiting for CSI to be taking break of market structure. Then you can see everything supports my bias. So please study this as much as you can, and until we meet next time, good day and take care of yourselves.